Here we're going to take a look at using the transaction sheets for whenever we have an owner investment or an owner withdrawal. And you need to remember that here is you, okay? And here is the business. This is the cookie business, okay? Now legally, if you are a sole proprietor, you and the business are the same. Legally the same. You are one. However, for transactions, for accounting purposes, remember that our definition of accounting is gathering, processing, communicating financial information about a business. And so it's the business that we're concerned with. We don't care about accounting for when you go buy groceries. We only care about the accounting for the business. And so we have to separate the business from you. We have to put a circle around it. If you give money to the business, that's you investing in the business. Okay? The business can also give money or assets to you. That's you withdrawing money away from the business. So those things can happen, and that's what we're going to talk about analyzing right now when those two things happen. But if you go buy groceries, you're using your personal money for your personal groceries. We're not even doing a transaction for that. We're only doing the transactions for the business. Whatever the business receives and the business gives up is what we care about, and so we're always looking from the eyes of the business. Okay, so let's say that you invested money to start the cookie business. Okay, and so what is happening? We have to say, is the business receiving or giving up cash? Well, the business is receiving cash. You personally are giving up cash from your personal checking account, and you're starting a new checking account in the name of the business. So the business is receiving cash. What is the business giving up? Well, the business is giving up a stake in itself, but rather than have to wrap your head around that, we're going to just put the words owner investment. For owner withdrawals and owner investments, we're going to do the same process. You're going to figure out if the business is receiving or giving up the cash. And then you'll put that down, and then on the other line, whatever it is, you're going to put down either owner investment or owner withdrawal. In this case, the owner is investing money into the business, and so we call it owner investment. Now I have to look up accounts for these two in my chart of accounts. Well, cash is an asset. The business owns the cash now, and so I look in assets and I see an account called cash. And that is an asset. Then I look on the chart of accounts, and owner investment is an owner equity account. And so remember, we have two owner equity accounts, the owner comma capital and the owner comma drawing. The owner comma drawing sounds like withdrawing, and that is what we're going to use for owner withdrawals. The owner comma capital account is what we use for owner investments. And so here you would put your name, and you could use your initials, U comma capital, and that is an owner equity account. All right, now we have to go back to the top and say increases and decreases. Do we, meaning the business, have more or less cash than we did 5 minutes ago? Well, we have more cash than we did 5 minutes ago. Is there more or less owner investment than there was 5 minutes ago? Well, 5 minutes ago there was no owner investment. Now we have an owner investment, so there is more owner investment. I go down to my transaction and I have a plus under assets, and I have a plus under owner's equity, and plus equals plus, and so we're good to go. Let's take a look at owner withdrawals. Now, once again, just like with owner investments, we have to take a look at, is the business receiving or giving up cash? If the owner is withdrawing it out of the business is giving up cash. What is the business receiving? Well, what it's receiving is the fact that there's less of a stake that the owner has in the business. But once again, rather than wrapping our head around that, we're simply going to say, is this owner investment or owner withdrawal? Once we have the cash in the right place, that's the most important thing. If you would have put the cash in the wrong place, the whole rest of your transaction all the way through, it's going to be a big mess. So really be careful about where you're putting the cash and thinking about whether the business is receiving or giving up the cash. Get that on the right line, and then you're most likely be okay for the whole rest of it. Okay, and so this is owner withdrawal. Okay, now I need to find my accounts. For cash, cash is an asset. We own the cash. The business owns the cash account, checking account. And so we look under assets and we see an account, in fact, called cash. So that's what we'll use there. And that is an asset. Okay, and then for owner withdrawal, just like owner investment, that's going to be an owner equity account. So we look on our chart of accounts, we have two owner equity accounts. We have the owner comma capital and the owner comma drawing. Owner comma drawing is for owner withdrawal. Okay, and so you would have the owner's name, that was you comma drawing. And that is an owner's equity account. Now we ask ourselves increases and decreases. Okay, does the business have more or less cash than it did 5 minutes ago? Well, it paid it out. It gave cash to the owner. So the business now has less money in its checking account. So we have a decrease in cash for the business. And we say, do we have more or less owner withdrawal than we did 5 minutes ago? Well, 5 minutes ago there was no owner withdrawal, and now there is an owner withdrawal, so obviously we have more owner withdrawal than we did 5 minutes ago. Okay, now here, if I just put that I have a minus under assets and a plus under equity, I have minus equals plus, and that does not equal. Does not equal. So I have a problem somewhere. Well, what the issue is that owner's equity, okay, the owner's equity, if we have an investment, that's going to increase owner's equity. If we have a withdrawal, that's going to decrease owner's equity. Okay? And so when we get down to this chart, we have to do what is actually happening here. And so how is equity actually being affected? The more withdrawals that there are, the less equity there's going to be. And so we have to change this plus. We're going to leave it a plus up here. We're going to leave that a plus because when we get into debits and credits, we want that plus to stay there. But when we get down to this chart down here, we're going to put the minus under assets like we have up there, but we're going to change that plus to a minus here because withdrawals decrease equity. And so now I have assets, I have minus equals minus, and my transactions balances.